Time for this morning's Show Me the Money. It is tax time. All of us need to make sure we understand the ins and outs of what we owe, but that's especially true for seniors. When it comes to taxes for seniors, be careful. Chris Orestes with Retirement Genius says there are tax opportunities and tax traps. It's important to know the difference between the two.
Well, there's some areas in taxes that are advantageous once you become a senior. You get certain reductions in tax rates, certain opportunities for tax deductions. But then there's also areas that if people don't understand what they're doing with their taxes, with their income, with their retirement accounts, it can end up costing them more in taxes, in penalties and things like that.
Here's a trap many people don't realize. Social Security can be taxed if you're still bringing in an income.
If you're making up to $19,500 in additional income, that won't impact your Social Security. But if you get above that threshold, then you'll start to feel a tax impact on your Social Security benefit.
So instead, look for tax opportunities.
So let me ask you about investment income. What types of tax advantages are there for people who are 65 and older?
Great question. Investment income is a good example of a tax opportunity. If you're getting investment income, dividends, or capital gains, once you hit 65, your tax rate drops to 15%.
Long-term care expenses can also be tax opportunities.
The cost of a nursing home, memory care, assisted living, home care, or you're paying premiums on a long-term care insurance policy, all those dollars can be tax deductible.
A retirement account can be both a trap and an opportunity. Money you put into a 401k while you're younger and working, those are pre-tax dollars. But
if you take money out of those accounts too soon, before the age of 59 and a half, you're going to pay a 10% tax penalty on top of the income tax for the money you've withdrawn.
Many seniors are on a fixed income. Every little bit helps. So avoid the traps and seek out the opportunities.
If you aren't maximizing your dollars, if you're not getting the most out of every dollar, and if you're not doing all you can to keep every dollar in your pocket that you're entitled to versus giving it up to Uncle Sam, then you're just going to feel that as a shortfall in your budget, in your lifestyle.
Chris also says with retirement accounts, once you reach the age of 72, you have to take a certain amount out of that account every year or you will be taxed. As always, it's a good idea to sit down with the tax advisor to make sure you're paying what you owe, but not more than what you owe.